We are here at the launch of Jio BlackRock Mutual Fund's Flexicap Fund, and joining me is Sid Swaminathan, who's the MD and CEO of Jio BlackRock Mutual Fund. Thank you for joining us, Sid.
Thank you for having me.
Sid, I want to start by asking you that, Jio has entered the mutual fund space. How do you plan to disrupt this already crowded mutual fund space? Or according to you, it's a huge ocean where, everyone can have a space?
Yeah, I think if you take a step back, the reason for us starting this joint venture here is the immense potential that we see in the markets here. And there's a lot of tailwinds, as I call it. If you look at it from a macro perspective about overall GDP, how the economy is growing, productivity, demographics, those are all really, really strong for India, and there's global consensus on that. And then if you go one level deeper and you look at some of the micro factors around, individual participation in markets, that's really increasing, and it's still, at a small base. So more and more people are starting to move from, let's say, a saver's mindset to an investor's mindset, which is fantastic. So that potential, so the combination of these two is huge, which really gives me this confidence that, this market is going to go 2 to 3x in the next 5 to 7 years. So there is so much space for all of the incumbents to grow. So our role here is really to help grow the market. And then capture a share of the new growth. That's how we are approaching it. And how we intend to do that is really focus on our value proposition. So what do we come and offer that is unique to the market? What is differentiated? Whether it is the types of strategies that we're launching, we're doing one of those today with our Flexicap fund. Whether it is how people are able to access our funds. Right now it's all through primarily digital platforms, our own app, which is also very differentiated. And then how people, are actually paying for these funds and what the cost is going to be. So how can we make that easier and more accessible for more and more people? So those are the lenses that we're really applying. Again, wouldn't call this any single big disruption. I see these as a series of micro disruptions that over time could lead to a bigger change in the industry.
Could you tell us about the FlexiCap fund which you're launching? What are the traction you're thinking it will attract, and which are the sectors you would be bullish on, particularly this fund, and who are the target audience for this fund?
Yeah. The fund itself, so let me explain a little bit, right? So it's a very differentiated offering where we're approaching Flexicap, but we're using this lens of data, technology, AI combined with humans. So it's a platform that has existed for 4 decades in BlackRock called Systematic Active Equity, and that's what we're bringing to India with this Flexicap fund. So very differentiated way of actually constructing funds is what we're applying. And this specific fund, where the fund is looking to generate its alpha, is actually by making and taking views on single securities. So it's security selection that is really at the core of how the alpha is generated. So for this specific fund, the sector views are going to be as close to neutral, really. So we don't want to be tilting to any specific sector. It's actually about generating alpha in a risk-controlled manner by taking views on securities. The platform itself, so Systematic Active Equity, is very versatile. So we are able to then leverage the same platform, the data, the technology to produce funds that will be doing different things in due course. So whether it comes to sector rotation or other asset allocation types of strategies, we are going to be looking at and launching in the coming months. But this fund specifically is very focused on security selection. And from an investor's perspective, to answer your question on who it is for, it is accessible for everyone. I think having an offering that is broad equity market exposure, such as a Flexicap benchmark, and then offering an active return on top of that, should be suitable for anyone that's having that, let's say, long-term view on markets to generate returns.
So a lot of your funds will be now, leveraging technology and innovative strategies of alternate data and big data and all. So could you tell us more on that? That how are you going to, how will it play out?
Yeah. And one of those, I would say, reasons for doing that, right, is that the world has changed. And that's the one, I think, important fact to keep in mind is in the last sort of 1-2 decades, the volume of data that is available on everything has increased significantly, and then the processing power, whether it's the computers, whether it's AI, has also increased. So the ability to understand how things are working in different parts of the market, in different companies, using all these data points is exponentially increased. And this is increased at a pace where, let's say, the human brain can't quite keep up to analyze all of those data sets in a cohesive manner. So leveraging the technology is super important. And then combining that with the humans is, I would say, an equally important function, because while the tech and the data can get you so far, you still need humans there looking at how the, let's say, the individual models themselves are built. So, at the very beginning, how the data sets are getting combined by the model. So in the end, and then at the exit where you have, let's say, a final recommendation, almost going line by line and saying, okay, how does this recommendation make sense, not make sense? So I think the combination of all of this, where world has changed, lots more data, ability to process that data is really strong. So if you build a platform that combines all these and then brings in the human touch, we believe there can be a very differentiated offering for the markets, and that's what we're bringing with the Flexicap fund.
Are you positioning Jio BlackRock as more of a passive tilted with a lot of ETFs and index funds, or you want to be in the active space with the competing with the traditional fund houses? Anything, at least in the medium term?
Yeah. First, yes, I don't want to pick sides. I think for me, it's active and passive is how I think about it. And again, that goes back to some of the points I've made around asset allocation, right? So for every individual, thinking less about the single stock or even the single fund, and more about, how does the collection of stocks or funds come together in my asset allocation to help me achieve my goals depending on where I am in life and what I want to do in the short, medium, long term is really important. And active and passive have an equal role to play in that. The mix of those could be different depending on the individual. Some might want more of a passive core building block type of approach and then add some satellite active exposures on top. Some individuals, depending on their risk, might want to do it differently. But there is space for all. So, and that's why even with our launch so far, we've launched with, cash funds to start with, then the 5 index funds, which had equity as well as debt, and now this active equity fund. So providing that full universe of exposures across asset classes as well as investment styles is equally important.
And how do you plan to leverage Jio sort of spreading out to the tier 2, tier 3 cities? Because that's where, we are seeing a lot of growth from the mutual funds coming in.
Yeah, that's a very good question. There are many ways to approach that. For us, I really believe there's 2 key things that we need to do. One is that we need to educate. So we need to make people aware of what the benefits of investing are, how we are going to be approaching that, what are our, let's say, products in that space. So educating and getting people to understand what we have to offer is important. And then they need to build trust in what we are actually delivering to them. Once those 2 click, I think the phone is a huge liberator, right? Because once those 2 click, and what we've already seen, people are comfortable making those kind of decisions on their phones. And once they're comfortable doing that, then let's say the geographical boundaries of whether it's a tier 2, tier 3 matters less and less. So that's where a lot of our focus is going to be. Yes, we will need to look at how do we get our message across in the right way. So simplifying it, delivering it in local languages is important. But as long as we can get the education across and build trust, the digital ecosystem is a huge enabler of making people have the ability to access funds.
I also want to ponder on where are you going next? Like, what can we expect next in the wealth management space, SIFs, or what are the licenses, or what are the places where we would see your presence? And what's also your vision for the next 5 years? What are your targets of AUM? Where do you see yourselves?
Yeah, so 2 things. So taking a step back and looking at the joint venture overall, as you pointed out, there's multiple entities that we are approaching the market with. I'm here representing the asset manager. We have a wealth manager that is has been announced and will be coming to market soon, and similarly for the brokerage. So the entities themselves are multifold. And again, the vision of all of these is the same, which is to make investing easier, affordable, personalized to more and more people, and primarily using digital tools. So that's consistent. And then within the asset manager as well, we've launched the first set of funds, as I said. There's active, there's passive, there's multiple asset classes. And then the wrappers that we're looking at, so ETFs is something that we're looking at, SIFs we're looking at. These are all still in early stages because we're very focused on our launch right now. Phase one for us, we are learning so much with every fund launch that's the core focus for the team. But over time, we want to make sure that we have the range of products and solutions that cater to the different segments of the market, the different types of exposures that people are looking at. So all of these are areas that we're looking at. So it's more a question of when, not if. We don't have dates on it yet, but we will over the course of time. And in terms of targets, again, we're not setting ourselves the explicit 3 to 5 year target right now. As I said, this is phase one, very much learn mode. We're learning a lot with every fund launch. Once we get through the first phase, know how investors are responding to our funds, how they're accessing our funds, we'll be in a much better place next year to start setting some goals and targets for the future years. So that's how we're approaching.
Because the mutual fund industry is also growing with a lot of pace. So maybe 2 times or 3 times or any number.
The industry itself, yes, absolutely. I think the trends that I talked about in terms of the macro and the micro are so much in favor that I can see this industry going 2 to 3x in the next 5 to 7 years. So that's a very positive view from us. And then our role in that is to help grow the industry by providing the information, education, by building the trust, and then offering differentiated, unique products. So that's how we see ourselves in the ecosystem.
All right. Thank you so much, Sid, for speaking to us.
Great. Thank you for having me.